Hi everyone. So today's this video is on the revision questions number 2 on personal tax computations. So if you notice that this question will be slightly different what you see in your tutorial question as well as past year's questions, but these actually what are the common formats that we do in practicals, which is maybe similar questions that you might find in your final assessment. So don't worry, I'm going to brief you on the requirements, what you need to do on this part. So you are a tax association in EC Tax firm. One day, Ken and Natalie, which is both citizen and residents, has appointed your firm as their tax agents. So they meet you and your tax agents, tax managers, with providing all the information as below. So after all this information, which is what you need required to do, after the meeting, your tax manager requires you to perform the following tasks. A. You have to prepare the tax computations for Ken for YA 2019. B. You have to prepare the computations for Natalie for YA 2019. And also prepare the tax payables computation for YA 2019, assuming Natalie has allowed all her income to be jointly assessed with Ken. And D will be find out which is the better way for them, which is the tax efficiency, whereby they should go for separate or joint assessment. So even though the kind of formattings or the kind of questions asking is slightly different, but in terms of the required task is same with what we always want you to do. So in your final exams or final assessment, when you see this kind of questions, to prepare it, I still need you to prepare in this way, which is the titles, income tax competition for YA 2019. So start with the separate assessment under Ken's name, then Natalie, and then next last column will be joint assessment under whose name. So if you read through carefully, is Natalie has elected all her income to jointly assess with Ken. So which means Natalie will pass all her income to Ken, so the joint assessment will record under the name of Ken. So prepare the same tables like this in order to find out the solution whether joint or separate assessment better. So I need to see the table like this when you prepare your final assessment. So without hesitate, let's look into the questions. What are the detailed information provided to us? Firstly, if you still remember just now I told you that Ken and Natalie are both Malaysian citizen and resident. Okay, based on these wordings, we will see that if Malaysian resident, of course, you will entitle a skill rate tables, and they will enjoy a personal relief of 9,000, and maybe rebate if their chargeable income is actually not assisting 35,000. So this one can't comment now because this one is depend on their chargeable income that we can only decide it later when we calculate their chargeable income. So next one, the next information. So I'm going to begin with Ken first. Okay, so Ken and Natalie have one child, which is Jasmine. Jasmine is 22 years old this year. She's a disabled child with having a full-time degree in public youth. So if you look at the first information like this, you'll notice that there will be a child relief of 14K, disabled 6K plus more than 18 years old and studying another 8,000 additional, so total 4,000. But then who claim? Because under separate assessment, which is father and mother can only claim once. Either one can claim only. So in this case, the next sentence tell you more details. Can spend 22,000 per year on Jasmine. So very obviously that in this questions, Ken will entitled to claim this child relief 14K. Okay, so next one, Ken also living together with his parents. Please notice there's an S over here. Okay, which are both also 90 years old and no mean on his own. So since the parents, both of them father and mother, have more than 60 years old and the annual income I believe is below 24,000 there. So in such a case over here, there will be a parental relief of 3K. Okay, but this one, please check again your questions whether can have pay any medical expenses on the parents or not. Okay, because this is mutual exclusively. But in this question, if you go through, you notice that Ken do not spend any medical expenses on his parents, so he will only entitled to claim a parental relief of 3K. So next one, look into details about his employment income during the years. Ken was employed in JYP Malaysia's company since July 2010. Okay, as an engineer with a gross salary of 5,500 per month. So, however, he decided to retire on 30th April, which is in this year he only worked for 4 months in JYP Malaysia company, and also he received a gratuity of 12,000. Okay, up to here we have a few information. The first information, which is based on his salary, we will record into 13.1a 5,500 times only 4 months for the reasons of he decided to resign on 30th April, so which is from January until April 4 months. So 22,000 were recorded in his section 13.1a. And same goes the gratuity. The gratuity were recorded in 13.1a, but you need to analyze a few things, which is whether can entitle full or partial exemptions. To get a full exemptions, you must be resigned or retired due to ill health, but they do not state it here, so you can ignore these conditions. Second condition is the can age must be above 35 and it stay in the same company for at least 10 years. Although the questions do not get us the age, but doesn't matter because the most important is that Ken working in JYP is starting from July 2019 and resigned on 30th April 2019 years. Therefore, he's working in the same company for 8 years and 9 months only. So he don't get the employment for at least 10 years. So in such a case, there will be no full exemption on gratuity for Ken. Then we go for partials. Partial is 1,000 times complete years. So the 9 months of the working you can ignore. So we take into considerations of the 8 complete years. So 1k times 8, which is 8k here. So the rest of 4,000 will be taxable for Ken. Okay, after resign in JYP, Ken started a new job with Times and Rambahan as a senior engineer effective on 1st May. And this is the salary he received it. This is the net salary which minus STD, SOCSO, and also so-called as the employment insurance scheme, and total 11% of EPF. So the first thing I'm going to do, which is I'm going to add using the net salary plus the STD, SOCSO, employment insurance scheme, then I get 6230 over here, then divide by 89%, so which means my per month gross salary will be 7k times 8 months. Why times 8 months? Because he joined this Times and Rambahan since 1st May. So May until December is only 8 months. So end up he recorded another salary in 13.1a, which is 56,000. Not only this salary given in this question, there are few questions is actually hidden or hints is hidden. The first one is EPF. Yes, according to the question stated that he actually minus his salary for 11% of EPF, right? So we're using the total gross salary here times 11%. This is what can contribute to his EPF. So according to the employee contributions of EPF, it will be under EPF relief, but maximum is only 4,000. So this one don't forget. Sometimes the question will not highlight EPF relief for you. You have to calculate for yourself. And not only this, one more thing which is on the STD. If you notice from the question, there will be STDs of 200 times 8 months, so will be 1,600. So in your last part of question, don't forget you will have an STD. Actually, we have another SOCSO here, but if you have scanned through the questions, we do not need to calculate it because the questions already tell you a SOCSO over here. So you just plug in 237 for Ken, that's it. Okay, so we go back to the questions. Okay, another one's items which is a bonus equal to 1 month gross salary. So this will record into 13.1a bonus, and the gross salary per month in this Times and Rambahan is 7k gross. So put in the 7k. And next one we see there are few allowance, entertainment allowance, medical dental expenses, childcare allowance, and overseas leave passage. So we're going to do one by one. Let's start with entertainment allowance, section 13.1a. 500 times 8 months because he only joined starting from May. So we have 4k of entertainment allowance. And then we have 1 medicals and dental expenses. This one will be under BIK, section 13.1b. And for information, medical and dental benefit is actually exempted, or we call tax-free BIK. so will be nil. Next one, you see childcare allowance of 400. So allowance will be under 13(1)(a), and 400 times 8 minus 3,200. If you guys still remember, childcare allowance normally we will have an exemption of 2,400, but with a term and condition which is the child age cannot be more than 12 years old. So, however, in this case, so-called as Ken will not be entitled for the reason of his child Jasmine in the earlier part is 22 years old, which is more than 12 years old here. So no exemption given, which is straight away using the 3,200 taxable value. And next one, which is the overseas leave passage here. The overseas leave passage will be under so-called as 13(1)(b). So for 13(1)(b) leave passage, the FF 5,000, remember, exempted 3,000, so 2K will be taxables. And the accommodation 4,800 will be fully taxable, so no exemptions on that. So I want you guys to remember for overseas leave passage, the 3K exemptions apply only on FF. Next, links on 1st July 2019, a 7-year-old car was provided to Kent, okay, with cost 200,000. So firstly, for this kind of so-called as car, we put into 13(1)(b), and we look at the cost, which is 200,000. So how we find it? Don't forget, normally all the questions will give you a reference list, and in your reference list you will see a value of BIK for car, okay, for motor car here. So since the question say that the car is 200,000, so the BIK for car will be 7,000 here. But I can't put in the full 7,000 for the reasons of this is an old car, more than 5 years. So I will need to slash half first for the old car. And next thing, because the car was provided since July, so it will be July until so-called as August, which is half a year. So times 6 divided by 12. So our record taxables for BIK car will be 1,750. And next one, we have a driver salary reimbursement received from the company. So I believe that most of you, when you see the word driver, you will definitely put in so-called section 13(1)(b). And looking at the reference list, for so-called as BIK for drivers will be 7,200. Then due to this driver salary, or we call driver reimbursement, was starting on July, so will be times 6 divided by 12. But unfortunately, if you're doing this, you are totally wrong. This is a wrong answer. The focus, yes, is a driver salary, but it's a kind of reimbursements over here. So which means that a reimbursement means that you pay first and you receive the money later. So in this case, are you receiving a driver's or you receiving a money of the salary? So in such case, because of the reimbursement, we will change your answers rather than 13(1)(b) to 13(1)(a) reimbursement of driver's salary. And you do not need to refer to these tables over here because this table is actually for BIK. But then in reimbursement, we are not doing BIK, it's section 13(1)(a), so there will be no 7,200 straight away using the driver salary given by questions 1,500 times 6 months because starting from July. So 9K will be taxables for this reimbursement of driver under 13(1)(a). So be careful, most of your friends or most of your seniors always make mistake on this kind of reimbursement. Okay, next one, we have a fully furnished apartments given by the company to Kent starting on 1st July 2019. And the furniture value is 300 per month, but basically we can ignore this because furnitures were recorded into 13(1)(b), and according to 13(1)(b), furniture value is actually 3,300 if you notice from your table reference list. So this 3,300 that we put in, remember times 6 out of 12 because it's effective from July. Then we left the apartment part. So due to this apartment is a normal house, and Ken is working as a senior engineer, which is a normal positions in the company. So in this case, for the 13(1)(c) formula will be defined value, which is using the defined value of the house, 1,500 minus 300, 1,200 times 12 1. we get this defined value per years. And then 30% of your section 13(1)(a). So this is your 13(1)(a) figure that you calculate. You should tally with mine. So 30% of this. So among these two figures, which one is the lowest? Of course, it's 14,400. But I can't take this 14,400 into taxables of 13(1)(c). For the reason is this 14,400 defined value is based on yearly basis. But then this company house apartments were only given effective from July. So remember, the lowest figure that you plug in must be times 6 divided by 12 because effective on July only. So end up your section 13(1)(c) will be 7,200. Okay, last part we have a corporate memberships, whereby the company provided both entrance fees and also subscription fees for CAN. So in such a case, for any kind of club memberships, you have to identify whether it's individuals or corporate. Because if let's say individuals, then you register under your name, company will pay back you money, so that one is like so-called as money form will be 13(1)(b). But if let's say this is a corporate membership like CAN situations here, which means that this membership is registered under the company name and company granted you a benefits memberships that you can join this club with entrance fees and subscription fees are free paid by the company. So in such case, if this is the case, you receive a benefit. This is under 13(1)(b). And 13(1)(b) corporate membership entrance fees is exempted. Subscription fee is taxable. So using 500 times 8 months because he only joined since May. So Natalie parts I will do it later when I'm doing the tax combination for Natalie. So the next part related to CAN is about all the expenses of employment and also personal. So I can conclude that when you finish CAN, we will have 13(1)(a). This is the 13(1)(a) figures. The 13(1)(b), 13(1)(c). That's it for him. And this is his gross employment income. Okay. Then the next part, to end up whether the gross employment income with statutory 4B, is it a tally or not, then you have to look at deductible expenses. So in your expenses part, we will see that CAN actually contributes for entertainment expenses for official duty of 5,000. So this is actually a deductible expenses, but for entertainment expenses there will be a restriction. It restricts to entertainment allowance. So check back in your 13(1)(a). If you still remember, there is one entertainment allowance which is 4,000 recorded by us. So which means on this deductible entertainment expenses, even though it's 5K, but it's still restricted to only 4,000 deductibles, which is restricted to your entertainment allowance. So gross employment income minus deductibles entertainment expenses. So end up this is a statutory 4B. Okay, so if you scan through the question, you notice that this is the only source income for CAN. So if you see that in my statutory 4B with my aggregate income is the same one, and same goes to total income. Why I so fast go into total income? For the reason if right after aggregate income should be current year business loss, but CAN is not doing business, so you can ignore this part. And then right after current year business loss will be approved donations. However, in the questions never state that CAN is making any donations. That's why aggregate income and total income is tallied. So this will be my figures for total income for CAN. So next part, which is relief. If you guys still remember that CAN is a Malaysia resident, so he will entitled at 9K. His child is a disabled and more than 18 years old, is studying a full-time degree in public university, so 14,000. Parental relief of 3,000. And just now when we calculate the salary, don't forget there will be EPF. Okay, so most of them will actually ignore the EPF part. So they'll go back to the question, what else that we're missing? So SOCSO. So SOCSO maximum amount is 250. So he only claimed 237. So take all. So you'll see in my answers here will be minus 237 for SOCSO. And next list, which is life insurance for himself. So for the life insurance for himself, yes, it's entitled in your relief, but maximum is only 3,000. So you put in 3,000 as your answers. Then medical insurance premium for child. Under medical or education insurance, maximums for child, spouse, and self is 3K only. So in this case, he can take all the 2,200. And next one, books and magazine will be under so-called lifestyle relief. Lifestyle relief maximum is 2,500, so he take 450 as his answers. So end up this is his chargeable income. Then taxables, because of so-called residence or skill tax rates, he will get this first and balance. And due to his chargeable income is above 35,000, so no rebate entitled even though he's a Malaysia resident. And lastly, if you remember the net salary parts, he have actually deduct for STD, so 200 times 8 months, so we have 1,600. So end up this is his next to be paid. Okay, so Ken part we have done. So now we are moving forward to Natalie case under a separate assessment on Natalie. So we're going to focus on all those cases related to Natalie, starting from here. Natalie is 49 years old. She commenced her employment in a Yummy restaurant as a chef since January 2017. For this year, he received a net salary of 1,958, which is after deducting of 11% of EPF. So in this case, the information given to us for Natalie will be 1318 salary using net salary divided by 89%, so 2,200. But why my answers here are times only 4 months rather than 12 months? Because it relates to your next paragraph. However, company terminated Natalie on May, so which means the company will only agree her employment, which is starting from January 2019 to 30th April 2019, which is only 4 months. That's why my salary is only times 4 months, which is 8,813.18. And then another part of this, because the salary will minus so-called as EPF, so there will be a EPF which is using 8,800 times 11%. You get the answers of 968. So the maximum of EPF is 4K, so she going to take this 968 as his EPF relief. And nextly, when the company terminated Natalie on May, the company paid her a compensation for losses. So for compensation losses will be recorded in 13(1)(e), and the compensations will get exemptions of so-called as 10K per complete year. So he's working in the company since February 2019 to May 2019 is totally of complete of 2 years and few months plus. So we take into consideration of the complete, which is 2 years times 10K, so 20,000. End up she just need to pay tax on the compensations, which is 10,000. Next one, beyond the employment incomes, Natalie also received a dividend income of 5,500 from a resident company. So beyond the employment income that she earns, she also have a dividend income under section 4C. Okay, and the answer will be nil. Why? If you remember, under dividend we got a lot of exemption. One of the exemption is we call single tail dividend. Single tail dividend is as long as the shareholders receive a dividend from any resident company in Malaysia, then this will be under so-called single tail dividend. Single tail dividend will be exempted. So that's why the section 4C for Natalie will be nil. And beyond not only the section 4C, she also rent a house and receive a rental incomes of a shop lot in Penang. And okay, so this is all the expenses she incurs. So the rental income is 14,400 per year for holds. So the question never state that she actually provide any comprehensive maintenance support services and also actively. So this will be considered kind of investment purpose, will be under section 4D. So section 4D's rental income and the house is actually located in Penang. This is deemed derived from Malaysia. So end up this employment income, this rental income will be recorded as Malaysian rental income right after your section 4D. And we list out a few expenses here. So the first one is quick rent assessment. No problem, is deductibles in full. Renewal of tenancy agreement, no problem. Remember, unless you are first time tenancy, first time advertising, first time commission, this is all non-deductibles. If not, renewal means second time you can deduct in full. Fire insurance, yes, no issues, but be careful with installation of new roof awning. So if let's say when you install a new roof awning, this is actually initial expenses, or we call this is as a fixed expenditures, capital expenditures. So sorry for installation of new roof awning. This is non-deductible. You have to put new as your deductions. So in short, up to years, Natalie earned an employment income, a dividend income, and also a rental income. So they have three sources of income earned by Natalie. And next once when you finish, Natalie do not spend any entertainment or any deductions expenses regarding to employment income. So looking at my format, you will see Natalie will have a salary. So this is her, and also a compensations of the losses. So this is a statutory section 4B. She do not have any deduction of expenses here. The dividend income is nil. The rental income will be 14,400 because the house is located in Penang, Malaysia source, and minus so-called as quick rent, minus the renewal, minus the fire insurance, installation of record notes. So end up this is her aggregate income, and so goes to total income because she did not make any business losses and there's no approved donation made by her. So next one, which is after relief, she's a Malaysia resident on 9K. And let's know what else that she can claim. Do you see there's a SOCSO contribution for her? She can claim a SOCSO Senilai. Maximum SOCSO is 250, so no issue. She can minus a SOCSO. And just now, do you guys remember we have calculated EPF? Whereby the questions over here do not highlight it at all. You can see that. So don't forget your EPF that you have calculated just now, 968. And the next one, which is the life insurance for self, no issues. She can take all because the maximum of life insurance is 3,000. So she take all the 2,000. For her books and magazine, this part I want to highlight together with you. Books and magazine together with the sport equipment. These two bara is under lifestyle. Okay, but then for the sport equipment, be careful. The sport shoes in 320 included sport shoe 100. So 100 you should ignore. End up in this case, you can't record 320. You should record 320 minus 100 should be 220. So your sport equipment, be careful, not 320 but 220 plus 150 years. You can take all because it's within the maximums of lifestyle. And then medical expense for parents is 4,000. Maximums is same. So in this case, you can take all. Maximum is 5,000. So she's going to take all for her medical expenses on parents. So end up this is her so-called as chargeable income, first and balance. After you calculate your first and balance, you notice that in my answers I have a rebate here. Why? She's a Malaysian resident and also her chargeable income is actually below 35,000. So she fulfilled the term and condition. So the chargeable income, the individual rebate should be 400, but limit to whatever first and balance that you have. So I can only put in 19 ringgits and 21 cents. She do not have an STD, and up she do not need to pay tax at all. Okay, so this part we have done on the computations for Natalie. So next part we're going to compute, which is your task C. The task C want you to do the joint assessment, assuming Natalie select all her income to jointly assess with Ken. Do not prepare on the beginning. You just start with your aggregate income over here. So I'm going to add my total income from aggregate income from Ken, from Natalie, and this is my joint assessment aggregate income. So I'm going to analyze a few things because this is under Ken's name. Is Ken Malaysia resident? Yes. Then we put in the 9,000. The child relief and the parental relief co-on. Should I put in Ken or so-called as Natalie or put in both? Remember, this joint assessment is under Ken's name. So you can only put in Ken's parental relief. And SOCSO you can combine, but maximum is only 250 here. EPF you can combine, but again SOC maximum is only 4,000. Life insurance you can combine, but maximum is only 3K. Medical insurance for so-called as your child, you can take all. maximum is for 3K. And the books and magazine, this one I'm going to take all this will be under lifestyle. You can combine it. And last but not least, don't forget a spouse relief over here, because when Natalie transfer all her income to Ken, Natalie will have zero income. When your spouse have no income, you can claim a spouse relief of 4,000 here. So end up this is the chargeable income under joint assessment. So based on this, Ken is a Malaysian resident, so first time balance will be under scale rate. There will be no rebate given because his chargeable income under joint assessment is above 35K. And for Ken's and he entitled STD, so put in the STD. So end up this is the joint assessment, so-called as the income tax to be paid. So we have finished all the tax combinations, but don't forget you still have one more task given. The task which is asking about, please advise Natalie and Ken whether they should opt for separate or joint. So for answers, I will first look at the income tax to be paid. Separate assessment is only Ken need to pay 6,000 plus, Natalie no need. But if let's say when they join, they will have to pay about 12,390. So in this case, I will say the so-called separate assessment have shows, or we call result, a lower tax payable. Okay, so of course they should opt for separate assessment. But again, this is just a decision, but you have to tell them the reason why. If they have choose separate assessment, there will be a tax saving from 12,395. But if they choose for separate, they need to pay only 6,500 plus. So in this case, there will be a tax saving of 5,879.49. Okay, so there will be a tax saving if they opt for so-called separate assessment. And what caused this tax saving? Then the reason must be you have to look into so-called as your relief and rebate. Okay, so I'm using the first examples under personals. Under separate assessment, the personal relief that came by Ken is 9K, Natalie 9K, so total 18,000. But under joint assessment is only 19K, so the difference, which is a difference of 9K. Second one, if you notice, which is the parental relief, Ken claimed 3,000, Natalie claimed 4,000, so each of them have claims total together of 7,000 parental relief or medical expenses on parents. But under joint, only Ken's parent is entitled, so it's only 3,000 given. So this is another difference over here. And next on SOCSO, you will notice that Ken is claiming 237 SOCSO's contribution and Natalie is claiming 79. So totals, both of them have claimed so-called as 316 of SOCSO, but under joint assessment, because there is a maximum of 250, so they can only claim 250. Same goes to EPF. You will notice EPF, both of them claim differently within the maximums of 4,000. Combined together, they have claims 4,968. But due to joint assessment, you are combining and you can claim only maximum of 4,000. So there will be another difference over here. Next one is life insurance. Under separate, each of them can claim as long as within the 3,000. So add up together, they have claimed 5K. But under this joint assessment, when they combine, they can only claim maximum 3K. Another difference over here. So you notice this is the fuel root cause and not enough. You look at rebates. Under separate assessment, so-called as Natalie is earning a rebate of 19 ringgits and 21 cents, whereby this rebate is not entitled and not showing in the joint assessment. Due to the difference of relief amount and rebate amount, this caused that they should go for separate assessment, and separate assessment show a lower tax payables by a saving of tax of 5,000 plus. So these are the reasons that we should justify, clarify, and support you, Natalie and Ken. They should go for separate assessment. Okay, so end up you have to put in your point here. So this is how we need to present our report and show to Ken and Natalie. Okay, even the ways of asking it will be slightly different compared to your tutorial and your final exam passes, but it's still the same answers that you applied. Okay, so I'll see you guys on the next learning video on your corporate tax computation. See you, thank you, bye.